following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you're having a good Wednesday morning. We're almost halfway through the week. Wednesday's hump day. Just reiterating that. I love watching CNBC sometimes. I watch it for comedic purposes only, for the most part. They kind of dust off Mark Faber every once in a while and bring him out when they think the market might turn or whatever. And he's got the German. If you never listen to him, it's kind of funny. He's got the German. We are going to zero any day now. I love to listen to that guy. He's going to be right at some point. Well, not zero maybe, but he's going to be right that the market does downturn at some point after 6 years of continuously telling us the gloom and doom report. Interesting little way he coins it. If you've never read that thing, it is definitely the gloom and doom. We alternatively talk about technicals most of the time on this show, and you try to hang on to some of the things. I'm bringing this up because you hang on some of the things in some of these fundamental reports. You can get taken out in a body bag by being short for the last 5-6 years, and you got to be able to say uncle even if you're taking that advice, and just try to regroup. And that's kind of a really good opening for what's going on with the S&Ps here. We picked a couple of battles on the way up on the short side, and we did that based on these numbers right here. And Mark said something. I'm just going to keep going back to the to the guy that was on earlier on CNBC today. He said, well, the stocks aren't cooperating with the move up in the index. Well, we've been talking about that for a while, and that's why we've been preaching, where's the risk? The risk may be to buy stocks. And we've picked some good little ripe opportunities on the short side, but I want you to look at what's going on with this breadth. I mean, when he talks about, the breadth, he actually used the word breadth, but in his version of breadth, it's just stocks up for the day or down for the day or whatever. I mean, literally that doesn't mean a lot to me. On a longer term basis and on a shorter term basis, we want to look at how we don't even know by what he said whether stocks are just sitting in the balanced area still with the breadth, the normal breadth negative. I said a lot there. What we're trying to define is when stocks aren't cooperating, and if, at bare minimum, at least getting into what we call the fair auction. I watched a really good video yesterday that Stoudemire had done back in 2011. I'm actually going to post that link in the den in a little bit when I can find it again. And one of the things, Stoudemire is a very smart guy. And if you don't know, Pete Stoudemire kind of invented the way to organize the data, called it market profile, sold it to the Board of Trade in Chicago. And he's a very, very smart guy. But after listening to him for an hour and a half on the concept of the fair auction and he goes into these volume strips, and I'll send you the link. It's really an interesting, it's about an hour and a half. And he did it as an educational, little venue at the Board of Trade, or at CME, excuse me, for, their educational department. And, you'll find it very interesting. But, as these stocks that Mark's talking about going up, going down, the breadth, 500 stocks in the S&Ps, 300 up today, 200 down. We want to define with our information whether we're imbalanced on the downside or upside. We've tried to make it super objective, and we've tried to combine all those internals to help you trade the S&Ps and individual stocks in a real concise, easy to see. I'm going to pull up our breadth charts on the weekly. Easy to see. I'm going to take out the middle ground. Just when stocks are either internals are actually cooperating on the long term or short term for that matter, but whether the internals from a breadth standpoint relative to the fair auction itself are cooperating or not cooperating. Now, what we're seeing, really, really weird situation, and we've seen this before. We've seen it back in 2012. We had a big crossover there. May 2012. Look it up. And we've had some of these, and we've had crossovers. I just pulled that one up out of my butt there, but there's other dates. We've seen these negative breadths relative to profiles on market tops before, and this is our long-term view, and they've provided really, really good trading opportunities. And they've also provided situations where if you're long a portfolio, you might want to go in and hedge that portfolio based on profile breadth changing. All right. Now, alternatively, if we pull up our 60-minute breadth here, Tom and I were talking about this, especially, I think I'm going to take out the middle ground here really quick. Now, you can read things into the middle ground, and we'll talk about that on another show. There's a lot of different ways to look at this information, and there's some really esoteric, real kind of artistic ways of looking at it. But I'm going to take out the middle ground, and we've pretty much been even breadth negative on the 60 minutes since July 20th at around or in the morning, and we actually had that big crossover that we really haven't mitigated at all on around July 17th. So we kind of touched, but we stayed breadth negative here, even on our short term. That's a trading system in itself. All right. So I want you to take a look at this. I want you to monitor it. If you get a demo of this, you can see all this. But these are very powerful situations that are showing either disconnects or concert with what's going on in the index itself. So, what we've been talking about going back to the S&P charts is, we talked about a pretty big battle. If you haven't been watching the show, you're pretty aware of this. 2092 didn't work out. Tried another one at 2104. And why? There's the 2104. And why did we take these battles on the short side? Because we're looking for resistance areas to sell based on that long-term breadth, and the other breadths not really being, just not the rosiest situation as far as different stocks in the S&P showing concert with the index itself. So as we look at this, yesterday, in fact, we talked about let's wait for this thing to get back down below a little bit more of a riskier trade, down below 2122. And why did we do that? Because we go into our futures section, we go into the minis. Let's see here. Here we go. There's the 2104. And we've got a new profile that's appearing right now. Actually, those new profile areas are very, very wide on the daily. We're going to talk about that. But yesterday, when we were kind of in action, so to speak, on the morning, we talked about let's wait until we get back down below 2122, and let's keep our eye on the breadth, and let's keep our eye on the shorter term breadth to see if we can get some confirmation that it's okay to get back in the water and try something again on the short side. Now, the theme of this show usually is lose a little, lose a little, lose a little, make a lot. So you get clipped on the 2104. You look at the indicators, if you will, where's the leverage, and you pick a battle again, and then, you make it all back and then some. And what do you do with this now? So we're coming back down into that 2104, top of the box on the weekly, POC on the daily, general neighborhood. That's going to be somewhat of a stopping point for a while. Here's our 240s. Remember, we also got some help getting below unfair lows 2118. This is a real, if you guys are looking at this like, wow, this is a super simple system based on levels, you're exactly right. But these levels are based on what are the limits of the fair auction as we see them. And the theory is price action will move quickly as soon as it gets out of these fair auctions. And those are the trading opportunities. So you got confirmation on the daily, getting below 2122. You got confirmation also on the 240s, kind of that regulated that move up. And if you'll notice, regulate, breakout, support, blah, blah, blah. Then we have the breakdown on the daily, getting back down below the inflection point and breaking down on the 240s. So quite a nice way to look at the marketplace, in my opinion. But what do you do with it now? In my opinion, you've got to pay attention to these inflection points. These inflection points are, you got some earnings help from the Apples of the world and all that yesterday, but that was kind of after the fact. And here's 2104 and 2102, the POC here on the daily and the unfair high on the weekly. So in my opinion, you might need to sit tight. Now you got a pretty good move down, 20 points, and you might want to wait until we have a new 240 appear, which will give you some new leverage, hopefully, and for some kind of moves up to sell against. If you're willing to take a shot again on this thing gravitating back down below 2104, you got to be willing to put stops above 2104 at that point. So again, daily closes below 2102, 2104 are going to be super powerful. Again, I would love to see, going back to our we've actually got a peel back happening now, which is not yet indicated on the chart. That's the beauty of the scanner too. We actually do have some slight indications that there may be a new 240 attempting to appear, but we don't see those yet, and we don't know those new inflection points. So it's just a warning sign. So you've got a warning sign on the short term. You've got some major inflection points in the same neighborhood on the weekly and the daily. So I would, my opinion is I would sit tight and wait and not be shorting this in the hole. You may have a little bit of a bounce here that you may be able to trade, but stops would have to be below 2102 on that. All right. That was all in one breath, by the way. Let's take a look at a couple of things we got to talk about before we go to our first break, which is about a minute. And by the way, we're going to bring Eddie on, not specifically to go through trades. I want you guys to hear. We talk to institutions all the time. Eddie's on the phone with them constantly now. And, we just got something out of the way with Wells Fargo yesterday out of Charlotte down here. And I want you guys to hear kind of from the horse's mouth a little bit of, about how the institutional world thinks relative to, the rest of the world. And I thought it would be kind of interesting. The euro. All right, we talked a lot about this. Hopefully we could rally back up into some major inflection points, namely that weekly unfair high 109.49. We reached a high of 109.69, so got a little bit higher. Got to set your noise levels a little bit loftier, or excuse me, noise levels a little bit wider on these longer term inflection points. We talked about first line of support was going to be at the 240 unfair high. Now you've got new supply for day traders. That was the stop out. You've got new profiles attempting to appear on the 240s, and you've got some inflection points that have been met on the weekly and former daily box. Now new box here too. So a little bit more to talk about when we come back from break on this topic, but we'll be right back.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, guys. Welcome back to the show. I think we've got Eddie on the call. Eddie, you there?
Good morning, John. Good morning. It's actually noon at my place, morning at you. Yes, I'm here, John.
Great. Nice to hear your voice.
Yeah.
Again.
Skip that, Johnny.
Yeah. They don't care. So I tell you what, the reason I wanted to have you on is, you've been kind of in the trenches here lately, talking to institutions a lot about the scanner. And, what I wanted to do is kind of let the regular folks out there hear, that, you and I already know this, but as you're talking to, and, closing a Wells Fargo situation yesterday to their desk, institutional desk, I wanted you to kind of like maybe make an analogy or not an analogy of how they basically think and their needs are relative to what the everyday guy who's trying to, bang out some profits sitting in front of the screen all day is doing or needing.
Well, it's an interesting question, John, but yeah, I'll share with you my experiences, what I actually encounter when I talk to the professionals. And
Right.
they're professionals, they're kind of very skeptical professionals because they think they know everything and nothing else in the world that,
Exactly.
And it's very difficult to get something new to them, to get their attention. And when you start talking to these people, first of all, you need to listen a little bit to find out what they do. But the desk of Wells Fargo, it was extremely rare, a narrow-minded trading desk. They've been trading only fixed income. That means they're trading T-bonds and T-notes and all kinds of securities. related to the fixed income. Okay, so and he's asked me, Edmundas, fine, your stuff is brilliant, I love it, but how can I use it? I said, look, well, yeah, do you need to know where the general market is doing? Benchmark, that means S&P, because there's definitely correlation or discorrelation relationship to where the interest rates are going, depending on where the market is going. He says, yeah, obvious, here we go. How can I see that? Take a look at the market, Brett. Okay. What about commodities? What about the interest rates? Because other form of trading interest rates is a forex, right? In relationship, this relationship with any country's currency is actually related to the cheap or expensive long-term money. Okay. And we talked only a few times, and he agreed, and we kind of, in our professional language, we closed him, but probably he closed himself because he saw the value into it and how he can apply scanner, even though he's very narrow-minded, trading-orientated desk performer, money manager. That means broad application. Everybody needs to know where they're going, where the S&P market bread is long-term, short-term, and intermediate term. Everybody needs to know where the euro is in relationship to the dollar or to the pound or to any other currencies. Anybody needs to know where the dollar-denominated or pound-denominated or yen-denominated or crude oil is trading at. So yes, answer is yeah. We got a new client, new follower, and that proves me that we're on the right track. We have exceptionally high quality product, which is good for the simply investor with a $10,000 or with $100,000, which manages his own portfolio, and institutional client. That probably would be the answer what you asked me to the question you asked me.
I think well, again, you're on the battle lines here, and you talk to a lot of institutions right now. But one of the things too is I think you might have forgotten to say, which you and I talk about this all the time. They're on a quest. They're on a quest because a lot of the things that they have been looking at, in my opinion, Eddie, things change. This market morphs quickly, and you kind of got to be ahead of the curve as a trader in general. And this is something unique. It's different. It works. And I'm so happy when I see the light bulb or hear the light bulb go off or whatever in these guys' heads. And it's just something that the average person may think that these institutions have all the answers. You just stated very plainly they think they have all the answers, but in the back of their mind they are concerned. And a lot of them don't use technical analysis. And when we talk to guys in that world all the time that are 100% fundamental, it's not working. They know they need a good technical tool, and that's why they're coming to the table. Eddie, look, thanks for coming in today.
Let me object to clearly to that. Institutional traders, technical traders, and fundamental traders, both of them are using market breadth. All of them.
Right. Okay. Eddie, thanks for coming on today, man. I know you're busy. Get back to work.
My pleasure, John. Enjoy today.
Okay, man.
Take care.
Okay. Yep.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're looking for a great opportunity to diversify your financial portfolio, consider the Principal Protected Market Safe CD from Everbank. They've just released the second running of their 5-year Market Safe Power Metal CD.
which combines the power of gold, silver, and copper. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your deposited principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. There is no annual percentage yield or periodic rate of interest on the CD. Intrigued yet? The August 17th funding deadline is quickly approaching. So hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi, guys. Welcome back to the show. Going to take a look at the dollar really quick. Thanks, Eddie, for coming on, if you're still listening. Here's the dollar situation. Had the new profile appear today. Got that orange bar yesterday, that hint of it. Scanner shows that peel back as it's happening, showing that, hey, we got some hints of a new supply area happening here. Now, what do you do with it? I think it's kind of a no trade, actually, right now. You just need to sit tight, see what's going to happen. Here's the 240 situation, new profile. Again, stops probably below 97.32 if you're going to think of a short-term trade there. And talked about the euro a little bit before we brought Eddie on. I just want to follow up on that. Again, stops above that weekly unfair high around 109.50 on the euro. I'm still loving this on the short side. Is that a McDonald's jingle? Loving this? Or? Can't remember. So let's go into the yen situation. McLovin. Okay. The yen situation, big time support, 123.39. Probably could back up the truck there, put the tight stop, see what happens. May get a bounce in that. I'm still bullish on the dollar. Yen probably going to get devalued a little bit more as we move forward here. Canadian dollar just unbelievably strong, weak, put it that way, but the cross is going higher. 2102, 2104 support on the S&Ps, just to kind of state, what we've already talked about so far. Gold, let's take a look at it. All right, so again, we were bearish on this thing, not, wanting to trade against the long-term trend now to find things weak. It showed its hand. We talked about some inflection points yesterday, hoping we would get a rally back up into 1116 and 1195 down below. That was a little bit of a range situation on the short term. Now we've closed below, retraced back up. Remember, former support, now resistance. But we were trying to opt out on support and sell resistance. That was the theme of trading with the trend. All right, now you see the writing on the wall here. We're probably going to try to shoot for some lows here. But again, you got to put stops above 1095 on that short-term trade. The long-term trade, you are just not in danger here whatsoever. We don't have any new profiles attempting to appear. Long-term gold shorts are okay, I'm happy to say. All right, let's look at energy really quick before we get into the apples and the other earnings type situations that we need to look at. We're going to opt out on crude oil really quick here. We're going to come back to it. Let's take a look at Apple. Okay, just typing my tech guys to change something here. Okay, so again, e-signal and a lot of daily charting packages on their dailies are not going to reflect current price. We're trading 121.50 right now, so we're right back down, believe it or not. This is our daily chart, and this is another great example of not being in something before earnings and trading the reaction instead of the action. So again, we've had a 7% haircut in this thing since those earnings came out, and that's on a zillion-dollar company like Apple. What is 7% of a zillion? That's a lot of money. So right now, we have pulled back into this 121.54. We're trading 121.50 neighborhood right now. Here's the weekly. We are now technically damaged again, just as we were 2 weeks ago, below our weekly unfair lows, which were all kind of lining up and compressing here. So I think we could possibly have a little bit of a bounce around 121.54 just because that's where we have an inflection point to pay attention to. Remember, the technical damage on the weekly kind of takes precedence over this. So this will be, you know, you're not going to have to get super bullish about this until we get back into, like somebody came in, until we get back above our weekly unfair lows. Right now, might have a little bit of a trading opportunity, intraday trading opportunity around 121.50. So keep that in mind. Again, our scanner is predicated on some of the things that are going on. I'm going to go back into going on with our charting packages, and I'm going to go to Apple and see it's not reflecting that yet until some of the data comes back from daily. So again, we're not showing that yet. We're not updated yet on that just because of what I just said. So that's unfortunate pre-market, but as soon as we get some of the, and remember, these breadths are not weighted. They are non-weighted internals and the compilation of those internals. So these are based on yesterday's close, 170 below, 132 above. Dailies have crossed over negative. Weeklies have stayed negative pretty much. And you've got that 60-minute momentum situation going on. But remember, the index itself is at 2102, 2104 on the S&Ps. Could have a little bit of a resting point here on the way down. And that's the way we're looking at the index and Apple in particular. Let's take a look at Boeing. And seemingly good news, 147.75 pre-market here. So we're kind of getting back into, you know, I'm not a big fan of looking at this as a trade one way or the other. I think the market's going to probably continue to come down. We've been looking for weak stocks in a strong market. Boeing, I'm just kind of throwing away right now. You know, it's going to have some intraday action, but I'm a fan of looking for weak stocks right now in a market that has been strong, and that's just the way we have been using the scanner to identify what should be on the radar screen as far as weak stocks. So let's just kind of go back to that really quick. Below the box, below the box. We got quite a few candidates here. And those candidates on both of those long-term time frames, it's the same story. The Lowe's Corps of the world caved in on the pullback. The Leg Masons on the pullback. 3M, we had that one the other day. I mean, these are things we have been talking about if you've been watching this show, that were weak stocks in a market that kept drifting higher on ether. And when the market turned south, these are the ones that had showed their hands previously. And guess what? You're a big winner. If the market had kept going higher, these wouldn't have been that painful. So again, hate to be redundant here, but Lowe's Corp, Michael Kors, Intel we had on the screen the other day. There's our kind of ace in the hole, GPS. How, let's see here. This, the usual suspects that we've been. Fluor Corp, FLR, FLIR Systems. If you guys remember, and look at this, I mean, they followed through. A lot of stocks that were on their highs might have come off, but these were the low risk opportunities that the scanner picked out ahead of time. Okay. Now you got the CSX Corps of the world. It's all red every time frame, getting its butt kicked. I'm guaranteeing that Avon is on here. Oh, wow. What do you know? Avon, AVP. Alcoa, the gift that keeps on giving. Let's see how it did in the downturn, just to kind of prove a point here. It's not AAA. That's... Oh, wow. Yeah. Interesting. Wow. It's weak. Wow. Unbelievable. Probably going sub $10, and this morning is trading 10.14. I'm laughing. Somebody said they could use ether in the den. All right. Okay, so let's take a look at a couple other ones on the radar screen. Coca-Cola. These are earnings-related situations, and the cool thing is this one's bouncing around for the most part, 41.47 pre-market, and not a lot of volatility with that one. But again, had a little bit of a lid there. We were paying attention to 41.48, probably going to stay below there, 41.42. So that where are the targets on the short side for this one? I'm not a big fan of shorting this one. It hasn't been the weakest situation in the world. You've got better candidates, but if put a gun to my head, would I go long or short this? I'd actually like to short it and put stops above 42 on Coca-Cola. I think the market is going to, based on the internals and what we've been talking about and the non-concert situation, the disconnect in the index and the internals, I just, you don't have a lot of leverage here on the long side to get really excited about going long the S&Ps or stocks in general, in my opinion. It's something Steve Rhodes said a while back, just keeps burning in my brain. This is what you call now a stock picker's market, and I just think the scanner is going to really help you out identifying relative to profiles, which are the stocks to be in and which are the ones not to be in for the long side, which are the ones that we can short and not short. And let me change something here. All right, let's look at the crude oil situation. Very similar to August crude. We've got September crude up right now. Again, here's the telltale signs. You can't go long this. On a short-term basis, you do have a little bit of a contra trade situation down here, 50.23. Again, got to put stops below there. The 240s have regulated this trade down. As you can see, not breaking stride hardly at all in the September contract. It's just amazing. I mean, pay attention to these things. Short-term traders got to be stopped out above 51, 52, somewhere in there. I mean, that's, just don't take my word for it. Just that's technically where we feel like you've got to kind of say uncle because some things may be changing. But you kind of hope, as we talk about all the time, that we can kind of migrate, let the market come to you. Just look at this 240 here. Yesterday, in fact, I mean, we go right back up into that resistance area. We caught a chance along with that daily lid and the 240 lid, just like there. We're waiting for breakouts or resistance areas. And, this has worked out quite well over time. I'm a big fan of playing that game and continuing to play that game. Let me get Tom's screen out of the way here. Sorry about that. Let me see. All right. Okay, so a couple of other things on the radar screen. Pre-market. Let's take a look at something that might be of interest that happened yesterday. Just so you guys can maybe get this out of the way as far as what might be the plan of attack on this one. Was that what I wanted to say? Yeah, Microsoft. Man, these are big moves down for companies that have a ton of cash. Telltale signs, some of the leaders, the Apples, the Microsofts, this is, okay, so we're trading 47.73 on Microsoft, or 45.73, excuse me. So we pulled right back into and reached a low of 45, right into that daily unfair low. This is another good example of not to be in these stocks. Like Kramer seems to just want to pile people into these things before earnings. I saw him get everybody long John Deere, must have been a year or two ago, can't remember, right before they came out, and John Deere was down like 9% after the earnings, and then never mentioned it again, just kind of moved forward. Just insane what that guy has actually said. And the pain he's actually caused people. 45.39. I mean, again, I don't think this is something I'd play around with. You've got better opportunities from a trading standpoint. And what do I mean by that? You're looking, in my opinion, for weak stocks in a market that's been showing cracks, been drifting up, which has been cool, to show these weak stocks hands even more so. So Microsoft, I don't see any real big leverage there. CMG, let's take a look at that one. We've been kind of talking about this one. I'm showing 690 pre-market. We've talked about at bare minimum just not looking to short this and waiting for earnings to come out, and thank goodness we said that. Let's take a look at, there's nothing to do with CMG, by the way. It's a strong stock. I'm not looking to short strong stocks. Let's look at GPRO. All right, so pretty decent news yesterday. Again, a stock not to be shorted. I mean, you've got better candidates. I mean, just because stocks are on their highs, they can go higher. They're not too high. This is the 240 on it. We'll talk about this a little bit more when we come back. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Tom Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, guys. Welcome back to the show. I think we've got a caller, Mike in Sarasota. Mike, are you there?
Yeah, hey, hi, John. How are you?
Good, man. How are you doing?
Great. Hey, I just wanted to compliment you and your team on the market breadth chart and indicator and those statistics.
Great.
Yesterday they worked very well. And what I do every day is I track both the advanced decline line, positive and negative, and also the breadth, up volume minus down volume. I've got two charts set up to do that, and that maintains the ratios for both the NYSE and the NASDAQ composite. And at 10 o'clock yesterday, the advanced decline line was a positive 650 issues. I looked over at the breadth indicator right at 10 o'clock, and it just turned. It had just become negative at 47% of the profiles below. Issues below profile.
Wow.
And at 10:15, the breadth, the advanced decline was still positive 490, and that stayed positive and went to break even. It was positive 20 at 10:30, and meanwhile, the scanner was already indicating there was a turn on its way. And I just thought that was fabulous. I thought that was a great heads up for anybody that's a trader or looking for an entry point.
Yeah, I mean, I love what you're saying. I mean, I love love kind of combining different concepts and getting more confirmation, and that's just a fine example of that what you just said. And again, like going back
I don't need to do that stuff anymore. Things are simplified. I don't need to take a reading every 15 minutes or every 30 minutes during the day on those things and try to pick up on a trend. It's already there in the crossover.
Yeah, I know, and it's a simple math calculation for that crossover, Mike, but it was just, again, I think you know this by now, it's showing a change in tide in what the marketplace is doing. And you can't get this information anywhere else. And I hear what you're saying. I mean, I kind of reconfirmed, like I said earlier today, that kind of watched the video that Pete Stottlemyre had done. It was about an hour and a half. I'm going to put that in the den for sure. But this concept is in my mind the only concept that I want to operate on. And thanks for sharing those thoughts. How's Sarasota today?
I haven't been outside.
Okay.
I got up and I was drinking coffee when Eddie from Spain was on, and I just heard the tail end of something about Wells Fargo, so I'll go back and re-listen to that later.
Yeah.
But thanks for doing everything you do, and have a great trading day.
Thanks, Mike. Thanks for calling in, and I'll look forward to any emails from you or from the folks out there about any questions about this, and please call again.
Yeah. Oh, one comment in that Stottlemyre video. If you watch it, people need to drink coffee while they're watching it because it's kind of slow and very technical. One interesting thing I found, I watched a few weeks ago, and I thought it was interesting. He made comparisons about what happened in the pit versus the way it is now in electronic trading, and I thought that was an interesting history lesson.
Yeah, it's a great history lesson, but after Eddie and I watched it, and I've spent 2 years with the guy. I mean, I know him, and it's almost like you don't. After you watch it, you got okay, that's a great talk, but how does this provide value in what I'm going to do trading wise tomorrow? It's just not there, I mean, in my opinion.
Well, I wish nobody knew, but I found out last year that I guess everybody on the floor always had, even before there were floor computers, they had a sheet of paper with the pivot points, the support levels, and it was all based on market profile, and that's how they were all trading.
Right. Mike, we got to run. Thanks for calling in.
Thank you. Bye-bye.
Stay tuned for Larry Pesavento. Thanks, guys.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.